Good morning, ladies and gentlemen. Thank you for tuning in this morning. Hope everyone is having a lovely Thursday so far. We got a lot of news to unpack here on the Trump front, on the trade front, tariffs blocked by a court. We're going to go through some of the info that we know, but there seems to be a lot that we don't know. We're going to do our best here to get you some good info and some good perspective here. Also, some really important earnings overnight. Of course, Nvidia is how we're going to start off. Salesforce, also Elf Beauty, maybe a little synopsis. This morning we had Kohl's, Best Buy, Burlington. We do have a couple news items out of Tesla here overnight. We're going to go through a couple data points to highlight, maybe a little bond auction later today around 1 p.m. that we're going to talk about. And of course, we're going to go over a few notable ratings for the day. We're going to hop on with Joel a little bit later around 8:35 for a new guest to pre-market prep, a little tease there for everyone. But folks, let's get it going here this morning on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Christian Fromhertz, good morning, sir.
Good morning, guys. Good morning. We've got what an interesting day we've got on our hands to go through. I'm just going to go give you the quick rundown of what I see in terms of macro and the commodities. So first, we'll start with international markets. You had the Hang Seng up 1.4% overnight. Nikkei rallying pretty decently, up 1.9%. European stocks all in the green this morning. Euro Stoxx 50 up 0.6 of a percentage point. Turning over to the energy markets, you've got crude up 0.5% this morning, still locked in a pretty decent range there. Nat gas this morning up 0.8%. Let's get over to the copper market this morning. A lot of these have just been really subdued lately, but you got copper up about 0.75% this morning. Gold, interesting. Gold is actually up right now. I see gold up about 1%, and kind of hanging in here above the 50-day moving average. Silver futures are up 1.4% this morning. Looking over at the bond market, which Brent has mentioned, we do have a five-year bond auction, I believe, today. Bonds this morning are I see this down, but I think this is, down a little bit, fractionally down this morning. Not a big move in bonds this morning. Interesting with all the headlines. You don't really see a big move in bonds going on this market. Let's jump over to the crypto market. Bitcoin, which was down yesterday, recovering a good portion of those losses, up about 1.5%. And then I actually see Ethereum outperforming again. Making a nice move over the last 2 weeks. You got Ethereum up 3% this morning. Going over to equity futures. Equity futures right now only up. Let me just double check that. Are we only up that much or no? Yeah, look at this. We're that's wrong. Up 0.9 of a percentage point. Sorry, my trading view is a little bit tough on these futures. Sometimes they're a little bit delayed. Nasdaq futures, you're up 1.3%, and Russell futures, which I will get to, we're up about 2% last night. Now, still up decently, up 1.3%, but off the session highs. Good morning, guys. Dennis, how you doing this morning?
Woo!
Swivel since last night. It was crazy. Obviously, futures are trading up on Nvidia, and then we started exploding just after, I'd say around 6:30, and I'm like, what is going on? Then obviously we know what was going on. The courts are trying to block the tariffs. Brentster, you got the details on this, because this is market moving. We've leaked the gains back, but man, did we ever ramp overnight. IWM exploding 2% higher last night on this headline. It has come back in. Talk to me about this. What's up?
All right. So some of these tariffs are going to be blocked. Some of these tariffs are not going to be blocked. The base tariffs are going to be blocked. The reciprocal tariffs are going to be blocked. The aluminum, steel, and auto sector tariffs are not going to be blocked. the tariffs on Mexico, Canada, and China, where the reason for the tariffs was said to be drug trafficking purposes to block fentanyl from coming in the U.S., those are going to be blocked. Right away, I was trying to figure out like how much of these tariffs are going to be blocked, because we saw some tariffs that were extremely high so far. So there was a nice little Goldman cheat sheet going around the street, and that cheat sheet showed us that for 2025, since the start of 2025, sort of, I think only 7% of the tariffs that have been put on place in 2025 are going to be blocked immediately. So that is certainly some perspective here to keep in mind. The Trump administration has already appealed this blocking. The Trump administration probably wants to take this all the way up to the Supreme Court. And some perspective here, the Trump administration also has 10 days, according to this court claim, to sort of comply with some of these blockages. Is Trump going to do that in 10 days? Probably not the case. He's probably going to rely on this appeal. He's probably going to want to take it all the way up to the Supreme Court. Dennis, you had some really good perspective saying, like, well, how much of the Supreme Court does Trump control? So,
Yeah.
which is a lot. So
Yeah.
if this makes it to the Supreme Court, is Trump going to probably win? It sort of seems like that right now. You guys, Dennis and Christian, you guys both had some really good perspective though on this, kind of highlighting how much of these gains have leaked away. I mean, what was your kind of immediate reaction here, Dennis?
Before,
Okay,
sorry,
so
Dennis.
U.S. Trade Court blocking this is who is blocking this.
I was just going to jump in real
Yep.
quick, just to interrupt.
Yeah.
Hassett is on Fox Business. He just came out with a headline that says judge's decision on tariffs will be overturned.
Yeah.
So go ahead. I just wanted to jump in because the market's moving on that.
Yeah. So the market, the price is in nothing again. So we rally 2% on the IWM. The IWM is much more affected here by tariffs. We know this. It gets hit harder, obviously. You have the S&Ps are already up on Nvidia. So the IWM goes from being down actually with the after Nvidia was slightly down actually, and then explodes up 2% higher. We're in the STN room last night, and I said, well, he's going to appeal it. There's no doubt he's going to appeal it. So it was kind of obvious guy trade that was probably overdone when it was up 2%. Is he going to win the appeal? Probably, because if this goes all the way up to the Supreme Court, I mean, Trump kind of owns the Supreme Court, to my understanding. Like he's appointed at least one, and if not, I've got to think, and obviously we don't know for sure, but I think he has pretty good control there. So if it goes all the way up there and has to go all the way up there, I would think he wins. So I think this just delays tariffs, if anything. I don't think they're going away. I think the market last night, because the price of nothing is like, oh, tariffs are over. Stupid market. So we've come back in substantially here. More than 50% of the IWM gains are gone. Poof. It is delayed though, so it is a positive headline for IWM. It is a positive headline, obviously. XBI, think about, a lot of stocks that were obviously impacted substantially about it from tariffs as we were going down, the tariff tantrum stocks. But delay is really what we have here. Inevitable, I think that they're coming back. So don't think tariffs are gone. That's my opinion.
Yeah, and I think just to add to that, I mean, clearly a lot of things going on last night, because you got a small company that also reported, Nvidia, and you got a lot of moves going on. I would also take a look at, I think what's going to be telling this morning is, you mentioned IWM, which is very sensitive to that. I'm also watching the bond market, also watching what's going on in the VIX. The VIX is flat this morning. Bond market not really doing much off of this, and also, like, I've got Deckers up, for example, which is a name that got hit hard. I would look at your really tariff sensitive companies this morning
Oh
and
yeah,
see what they're telling you, because I think that this kind of, to me, yeah, Jay Rice says XRT. I'll bring up that chart
for
and see
sure.
what that move is, because that is definitely one. You got to go to the most sensitive areas of the market.
Nike, Lulu, the companies that make a lot of stuff. Apple, obviously with the iPhones, huge headline for Apple. So all those, think about the ones that had the tariff tantrum. Those are the ones.
Yeah,
So
and
yeah,
then
go ahead.
go ahead. Sorry.
No, I think that's the right train of thought here. They're saying just getting further clarification. Trump has appointed 3, is what our chat is saying, onto the Supreme Court. So he's got not total control of it, but he's got some of his people on there. So I just think I don't even know if it's going to get that far. In the end, I believe, my opinion, Trump's going to win here, and the tariffs are going to stay. So I think you're getting a little bit of a relief pop on the hopes that tariffs might go away. Probably not going to happen. Delay is all we see here. But again, to your point, Christian, Apple, Apple, obviously Amazon's been impacted by it. It's up more. IWM, the retail stocks, which Lululemon, Nike, they make clothes in Vietnam. All those stocks are up more than relative to the market here this morning. But we are leaking even right now as we speak. We are starting to leak more substantially here.
This seems to me like this is going to be pretty messy. I mean, now you're getting into a political fight about whether the tariffs go on or go off. And I think that's why you see the VIX inching up. The VIX is now positive on the session. So this messy, I think, is the word that comes to mind. From a trading standpoint, would you be hitting the sell button? Would you be fading this with 2 hands and saying, some of these moves up? I mean, that move in Apple is ridiculous.
Yes.
All the way up to 207.
Yes.
Do you think like these moves? I mean, they're already retracing quite a bit, but still,
yeah.
Still a nice move. If you were long Apple at the close yesterday, you're still a pretty happy camper.
I think it was a huge gift last night. A huge gift to the longs. We're still in control. I'm still sticking with my thesis that I think, with deal news and everything coming, I still think bulls are in complete control. And I still think when the next month we could hit all-time highs on the S&P. I do think there's still going to be a rug pull in the second half. But, this just got us, everybody's like, okay, here we go. This is it. And I think it was a knee-jerk reaction by the algos. I think the algos were probably wrong in this case. So, yeah, I think, you're looking at all those stocks that really traded higher on it. Taking profits into this probably prudent because, one, I don't think these tariffs are going away. So it was kind of a gift last night, way overdone last night. When the IWM was at like 210 last night, when Apple was up at 207, I mean, just so overdone. Because you just knew, like, it's common sense he's going to peel it. It isn't like, oh, yeah, it's over. But the market was like pricing last night like it was over. Because, again, I'm going to keep saying the market doesn't price in anything. That's why we said in the SDN room, he's going to appeal. So it was a gift last night. The rally last night was a gift.
All right. So shall we go to the other big story, which I feel like the story of the tariffs is overshadowing this little company called Nvidia.
It is
pretty good earnings beat. There's a question in the chat. We'll talk about what names are moving on that. What do you think about the earnings quarter?
Brent, do you give us those numbers? Oh, Brentster's not on here. Sorry. You snuck away.
Yeah, I got you one. Yep, I snuck away. I'm just taking some notes in the background for the recap. Get you the Nvidia numbers here. For the quarter, 81 cents and sales of 4.06 billion. That was beat versus 4.23 billion. The guidance, we were talking about this in the SCM room, like wasn't super hot. It wasn't, worse than expected or anything. They're expecting Q2 sales 44.1 billion to 45.9 billion. Analysts are at around 45.78 billion. So kind of at the weaker end there. Still, shares here this morning trading up about 5%.
Yeah, this was a surprising report, at least the reaction to it, because the report was fine. The numbers were decent, but they didn't blow it away by any means. And they rallied on it anyways. So it's just showing you, like, the bulls just remain in complete control. If you would have gave me those Nvidia numbers and say, well, the guidance going to be okay, and the numbers are going to be okay, I'd be like, it's probably not good enough. There's a high bar here. Stock's up 54% going into the report in the last 6 weeks. High bar, low bar. In this case, Nvidia didn't matter. They're buying it no matter what. So does this mean Nvidia goes back to all-time highs? Eventually, maybe. Still staying long in the long-term portfolio. I wish I would have held on to all that stock that I bought at 88 on that dip that day, but I sold half of it. I obviously still have my original position from back from $40 from a couple of years ago. So it's been good. I mean, I think Nvidia's still the AI play. It's not going away. I think you're going to get more opportunities on dips. I don't think you have to chase it today, and this is it. I don't think it's going to be a gap and go. I think there's going to be more opportunities, more chop and slop. But Nvidia has been unbelievable for a long time. The reaction here, you got to like it if you're in the bull camp.
And I think one of the things that came out, why there was a little bit of a delayed reaction, was because they basically stripped out the China issue and the China sales. So once they kind of once the market got the idea that, hey, okay, these numbers are reflecting that they're taking the China out of the numbers, then it were pretty good numbers. So, and I like how they're doing that. I like how they're basically bringing the expectations, like, hey, if we don't manage to, if we're not able to sell our chips to China, and very interesting timing of all this, because we heard right before the close yesterday too that there was a headline with Trump and regarding semi sales, doesn't want them going to China, and that actually brought the stock in, as well as the whole semi space. So there was names like Cadence that were going down, Synopsys, which we can get to as well. The Synopsys move before earnings was pretty amazing, but the fact that they kind of stripped that out, I think the market liked that, to say, okay, these are the numbers without China being included. And hence you got a nice move. And 143, 144 is going to be a big level for the stock to get through. So that's the level that I'm watching from a very technical standpoint. That 143, 144 is the top of the value area for the year. And I think that's going to be some major resistance. So that's the level that I'm watching today. What did you think about that reaction? Kind of like a head fake. Everybody gearing up for that announcement for Nvidia, and then all of a sudden we get an announcement about that more headlines with China.
Yeah, that came right almost the same time. So there's lots to chew on there. Actually, I think some of it was out before the bell even, but there's just so much to chew on here in this market all the time. This is the problem when you're trading, off technicals, or you're trading off stuff. There's just headlines all over the place. I mean, you don't know what the next headline's going to be. Nobody saw this, courts blocking tariffs headline coming. Like, that one's right out of the blue. So it's just headlines, headlines, headlines. I'd like to get back to normalized markets where we're not just looking at our news terminals waiting for the next big macro headline to break, because it's coming. So I'd love to get back to normalized markets, but I don't think that's happening anytime soon. I think it's going to continue to be headlines. Trump, I haven't even seen any tweets from him this morning, but he's going to come out talking about, this is ridiculous, and we're going to appeal on it. Maybe the market sells off a little bit more on that. So, we obviously know what we've heard, and we know he's appealing, and it's been said that he's already going to appeal, but he hasn't really spoke up. Maybe he's going to go on the pressers and talk about this and say how ridiculous this is, and tariffs are coming, and tariffs are going to come, and they're going to be fantastic and great and everything else. So it's just more headlines are going to be coming from all over the place, and that's not stopping anytime soon. So bottom line, the story remains, the themes, though, overall themes still remain the same. This market likes tech. This market likes AI. This market doesn't really like that much else, really. I mean, think about even the most recent rallies here. Yes, IWM has come off the lows, but XBI is sitting here still kind of in the gutter. Lots of retail darlings, retail stocks in the gutter. Drugs have been a mess. It's really been tech that has really driven us, from those lows in April and all the way back up. Stocks like Nvidia being up 55%. I think that story remains the same because AI is coming. It's going to change the world. And I think that's where you got to still be buying dips, is just on all the AI names.
Sure. Just to wrap this up, I have a chart of Cadence, which Cadence. They said that was the biggest one-day move in the stock since 2020. Just wanted to highlight that those headlines that came out before the close yesterday. Trump administration is restricting the sale of chip design software to China, with the Commerce Department's Bureau of Industry and Security sending letters to leading providers to halt shipments to China customers. The restrictions could mean an effective ban on doing business in China, with companies like Synopsys and Cadence potentially impacted, as they get 16% and 12% of their revenue from China, respectively. Here's the move in Synopsys, which, again, like, just coincidence that the name that reported earnings. I'm just going to give you the numbers for Synopsys really quickly. I know this is kind of getting in the weeds a little bit of some of the semiconductors, but still thought it was kind of interesting. Synopsys rises on results. It kind of like a really nice dip opportunity, because the numbers were pretty good for Synopsys. Let me see what they said. Their commentary: Synopsys completed the sale of the software integrity business, unless otherwise noted. Synopsys software integrity businesses presented a discontinued operation, and they reaffirmed their full year 2025 revenue guidance and non-GAAP operating margin. We expect to deliver a solid second half, and we're reaffirming our full year revenue and operating margin guidance, reflecting our confidence in the business and continued healthy for demand and products. So anyway, just wanted to cover this one briefly because these were really big moves yesterday in the space that happened before Nvidia reported earnings. Thoughts on here, or do you want to go to
Let's go to Salesforce.
Okay, you want to go to
which
sales?
was another
you
big move here too. And we are seeing the fade trade sneak back in here as well. Lots of moves faded last night, not just in the overall broad market, but you're starting to see it on individual stock names as well too. I'll give you the earnings on CRM, and they were pretty good. 258 versus 255. Sales 9.83 billion versus 9.75 billion. Slight raise on Q2 guidance up to $1.80, $1.82. They were at $1.71. They're raising the full year too, from 695, 703 up to 715 to 721. So a nice little bump in guidance too. The initial reaction, stock runs right up to the expected move. We've been talking about this. CRM closed 276, ran up to like 295. The expected move, I believe, was 19 points. So it almost kissed it right on. And then the leak. And it starts leaking and leaking and leaking and leaking. And now it's red. So, I mean, we've got to still be playing the fade trade and keeping the expected moves, in, like perspective here, because they seem to be holding a lot of stocks. Again, I know Okta the other day took out its low of the expected move, but a lot of times they are holding. And CRM went right up to it, kissed it, and then said, no, thank you, and started giving it all back. And now it's giving it all back. So, I mean, just overall theme here, it's not as easy for the bulls as it was a month ago. We're starting to see where gains aren't holding. Keep that in mind for Nvidia here too, holding up very well. But we've seen funny things happen when stocks open and then they start to leak. So it kind of feels like this market is a little bit of profit-taking mode here, Christian. Are you feeling the same thing? And talk to me about CRM. Were you trading this one at all?
CRM, I did not trade it, but I just had a feeling that this was going to get faded. And you do have a downgrade this morning by RBC, and they're citing the risk and the Informatica deal that was announced earlier this week. And I think that this is really interesting. We've seen a lot of these deals from Salesforce, and it's just been they're buying this company, they're buying that company, and like, what does that say? And I think the analyst hits the nail on the head this morning. Says the acquisition signals that the company may be back to an empire building strategy, making acquisitions instead of innovating organically. I think that that's a great point. They continue to do these bolt-on acquisitions. They purchased Slack.
They've been doing that for a while.
I guess. What's that?
They've been doing that for a while.
Yeah. So I think that that's part of it too. It's another acquisition. It kind of reminds me a little bit, and I hate to make the comparison because I'm not trying to say that about this name, but it reminds me a little bit of Cisco back in the day, where they used to do all these acquisitions. And it's kind of like, hey, if they're buying all these things, why can't they grow these things organically? They're such a large company.
And then continuing with this fade trade theme, let's go out of tech for a second and go to Elf Beauty, because again, same story. ELF, which has been in the gutter. Obviously it's come back in the last few weeks, but I mean, give it perspective. So it's a $200 stock a year ago, and it got down to $50. So it's rallied from 50 to 90, but it's been in the gutter here. So they come out, and the quarter is pretty good. 78 cents versus 72, 332 million versus 327 million. It said they're not giving guidance. They don't know about tariffs, not giving guidance. So they're pulling one of those. They hammer the stock on it. Stock goes down to $79 last night. Yeah, it did. ELF went down to $79 last night. And then the old buy-in shoes, the old fade trade, doesn't work fading on they fade them both ways. They start buying the dip and buying the dip and buying the dip. And about 30 minutes later, the stock's flat. And then you look at it now it's up 11%. Incredible moves. The initial move has not been right in a lot of cases here. And in this case of Elf Beauty and CRM last night, if you were chasing, you were losing. We're back to this environment where chasing is not paying the bills here. Fading is. Elf Beauty, now we've overshot maybe the other way. I don't know. What are your thoughts on this? This used to be a retail darling here It's went from bliss to piss, and now it's back to bliss here. Thoughts, ELF?
A complete 360 from what we were just talking about with Salesforce, because Elf Beauty also announced that they've got a deal, and the street really liked this deal. This is Haley Bieber's company called Rode. Not sure if you're familiar with that one, Dennis, but I certainly am not.
No, me
But
neither.
but the market really liked that acquisition, and the numbers were pretty good. So yeah, a bit of an overreaction to the downside. I mean, their numbers were, EPS 78 cents versus 53. Estimates were 73 cents. They beat on the revenue side too. So I don't know what that initial reaction was about, because the number seemed pretty good. Maybe the initial thought of because the acquisition was announced right around the same time as when the earnings release was, but
Yeah.
clearly they're embracing this deal, very different than what we just talked about with Salesforce.
Other stocks. Fade trade on a few places here, but let's just go last night here. One that did not get fade and one that's been in the gutter. I'm going to do Sentinel One S because I'm just covering the ones from last night. This is going to be one of your big losers of the day. This is the old FireEye. This stock here reported will give you the numbers. It seems like they always disappoint, no matter what. It seems like this company disappoints. So they miss on sales, 242 million versus 244 million. Sales guidance, they lower that too. EPS is just, 2 cents in line. You think about cybersecurity and how all these stocks are just killing it, like CrowdStrikes and Palo Alto Networks, and then you get Sentinel One. And Sentinel One just always finds a way to get under the bar. So we've got best of breed stocks and we've got worst of breed stocks. And this has definitely been one of the worst of breed stocks for a very long time. I'm not buying the dip because I don't like buying the dip on worst of breed stocks. And I bet you Christian Fromhertz is not buying the dip on this one either.
Yeah, I'm with you, and you make a great point. This has been a serial underperformer in the group. What you could always do if you ever want to see this, you could always put the stock versus its group. So you could put S Sentinel One in the numerator, CIBR, which is the ETF, and you could see just massive underperformance going back. I'll even bring up the weekly chart for you. But here's a really good illustration of what's going on with Sentinel One versus Cyber. This is just the underperformance of this stock since 2022. And this is just sometimes what you have in the market. Sometimes you have companies that are executing really well, and you have some companies that are not executing relative to its peers. This is the latter. The Sentinel One just does not do well overall versus its group. And, it's the same thing this morning with the stock down on earnings.
Spender says I'm wrong. This is not the old FireEye. I thought it was. Where's the old FireEye then? Where did that end up? I thought I thought this was it.
I thought this
maybe
was
I'm wrong.
too.
I thought it was too. I'm trying to see. That's a lot of years ago, FireEye. FireEye was always a perennial underperformer here too. So we'll just throw it in the same category anyways. I thought this became that, but I could be wrong. Maybe jump that up like Joel dreams and confuses reality. Poor Joel. I pick on him when he's not even here. Okay. This morning, earnings, Burlington. You want to talk about stocks that perennial outperform? This is one of those. Obviously, we got TJX, Ross Stores, Burlington. Ross Stores set the bar low for BURL. They reported last week. We know Ross Stores got beat up on their earnings, even though they bought the dip, because that's what they do on the stocks that they like. Burlington dipped hard on the Ross Stores report, probably set the bar lower, and that helped because $1.60 versus $1.41 was good on the earnings. The guidance was a slight miss, the top line was a slight miss, 2.5 billion versus 2.52 billion, and the guidance was just kind of in line. So it's like, it's okay. That's good enough though when your peer drops the ball and they reported 3 days ago. So that was good enough. The ball was lower. Burlington was down $20 on the Ross Stores report. And they're like, well, it isn't that bad. So they bought it back up and they're filling the gap here. Is this one you're interested in here, Christian? BURL.
This has been a tough one. I haven't really been doing much in the retail sector
Tough sector.
of late. It's just gotten complicated with the tariffs but nice little dip here. This has been an outperform over time. It's been an outperformer. So you had a nice dip here to 238. And if you bought the dip on that, you're getting rewarded here. Stock trading up to 257 right now. So nice move. I tend to like Burlington overall in the group versus some of the other peers. But Yeah, tough group I think to be in right now.
One
We
other
just have
one. We're going to stick with
economics that
retail just
came
for.
out.
Oh yeah,
Sorry.
give us.
Yeah.
No, break in. That's awesome.
We have GDP that came in negative 0.2% versus expectations of 0.3. Personal consumption, that also comes in a bit lighter, 1.2 versus 1.7. Initial jobless claims perks up a little bit, 240 versus 230. Claims also 1919 versus estimated 1893. So a little bit of weakness coming in there, the job group, but overall, again, folks like to talk about GDP and that number coming in a tick less than expectations, negative 0.2 versus negative 0.3. Reminder that you also have pending home sales at 10 o'clock this morning.
With Best Buy report, disappointed. Kohl's is rallying a little bit here. I'm just flying over those ones because we're going to get tight for time because I want to cover the Tesla news, and everybody obviously likes talking Tesla. Stock is up here again. So multiple headlines. Robo-taxi day appears to have moved up a little bit. I believe they're saying June 12th now, if I got that date right, for launch in Austin. And then officially it looks like Musk is now done with Doge. So moving back to run his companies full time here. The market likes both of those headlines. Tesla up another 8 points this morning. It dipped a little bit yesterday after it had a nice pop. So you have had a little resistance up here near this 365 area. But overall here, Tesla's still back in the loved camp and probably doesn't hurt that Musk is now going to start focusing all of his attention back on his companies.
Yeah, I mean, you've said this before, a few times, is that sometimes this market is a little bit dumb. We knew that he's going to be leaving, so you get the kicker this morning of him leaving, and the robo taxi, or his announcing of his departure of Doge, and the kicker of the robo-taxi event, which is apparently coming June 12th, so just a couple weeks away. There was some worry about when that event was going to be announced. So June 12th, and that is an event in Austin. On June 12th, a milestone in Elon Musk's plan to reshape the company around driverless vehicles and AI. The company has been testing self-driving Model Y cars in Austin public streets with no incidents and has operated a test vehicle with no one in the driver's seat for the first time. I did take a little bit of profits. I've been long Tesla, both stock and
Nice.
options. I'm looking for this thing to go to 375, and I think that you now have a chance for this to continue. You've got the buy the rumor, sell the news is kicked on now, and I think that this name can possibly run into the event.
That's a good point here too. We always talk about event and catalyst driven trading, and that is a huge catalyst, and they're be excited about it here too. You also have the breakout above 350. We were in consolidation station just under 350 for about a week and a half, and then we broke out of it 2 days ago. So if you think this breakout holds here, that's not a not a bad call here, Christian. I'm still long Tesla in the long term account. I had added to it and I took the ad off. I wish I would have held the extra shares that I added. I still have a core position, but it's a lot smaller than it was a year ago. And this stock has been very resilient in so many bad headlines coming out from this. It just kept shrugging it off and shrugging it off. We saw European sales down 49% year over year just a few days ago. Shrugs that off too. This stock is just all about the future. It doesn't care about auto sales at all right now, even though it's still an auto company, but it's looking ahead to FSD, robo-taxi, humanoids. The whole story here is just driving price here now.
Yeah, I mean, I thought that, I really think that there's an industry move to this too. We've now heard from a couple different companies. Yesterday it was Mobileye, a big story out about Mobileye and about how they didn't name the company, but there's more and more companies. My guess is that all of the big manufacturing companies are going to go the way of automated driving. A big manufacturing company said that they are hiring Mobileye. We've seen AUR was about a couple weeks ago was poached one of their senior executives to do automated driving. So I think really this is where the industry is heading, and I have been embracing this move in a lot of these stocks. I like WRD too, but we could talk about that next. I see Joel coming on. There he is.
Joel's here.
Joel, how you doing?
He starts on mute. Only Joel. Why? I don't see you on mute. Trying to figure it out. Joel, the old mute trick. Unplug your cord and plug you back in. We'll put you in the background here. He's getting it figured out. So we'll cover. Well, I just want to give final thoughts here on Tesla. So I do think dips continue to get bought here. I do think bulls remain in control. Again, the overall narrative matters though. So keep watching your headlines. Obviously, if we get deal news that can drive price higher. I keep struggling. This is my struggle with being bearish. Like I want to be bearish, because we've come so far. But I'm looking at, and I'm always about headline anticipation. I just don't see, the headline coming that's going to harpoon the whole market. I just don't see it. So that's where I struggle. And I do see more potential deal news. I do see, other stuff happening. Like I think we could get hit when Trump officially says I'm going to challenge this, maybe a little bit today with the tariff stuff, but it's tough. It's tough. It's been a tough story for the bears here for a while because the market's just been climbing the wall of worry, the tariff worries. Joel, are you here?
Yeah, I think so.
Yeah, yes. Okay, great. What's going on?
Not much. Interesting market here. Nvidia doesn't disappoint. Big rally, big fade off the highs though. So Bulls got some work to do to keep us up here, but they seem to do it.
They find a way.
Yep. All right, we're gonna go macro. We got a new guest coming on here, and I wanted to pop on and do the interview. So let's roll the intro.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves didn't even...
Okay, Chris, how you doing? Chris Zaccarelli, CIO, Northlight Asset Management, also co-founder Beacon Capital Advisory Group. Chris, how you doing on this Thursday morning?
Doing well. How about yourself?
We're doing good. Give us a little bit your background, how you got to where you are in the industry.
Yeah, I started up in New York at Lehman Brothers and Goldman Sachs, spent about 10 years trading some equities, equity derivatives, and working in our hedging strategies group, and then moved down to Charlotte about 10 years ago, joined the wealth management industry, first as a chief investment officer of a large RIA, and then kind of took my game on the road in terms of becoming an outsourced CIO. So I did that internally at another RIA in Charlotte, and now have spun off and I've created Northlight Asset Management, where I work with financial advisors around the country, helping them with their portfolios, either managing their money directly, their clients' money directly, or through just advising them on portfolio construction, research, big macro ideas, things of that nature.
All right. Well, an ever-changing market. We had a discussion yesterday coming on the show, and you had your approach to tariffs and the impact on the market, short-term and long-term, and new news. So talk about your original thesis and if it's been adjusted by the recent news.
Yeah, I mean, it's really been narrative ping pong if you think about it in terms of, Trump using the tariffs as a negotiating tactic, then people thinking about tariffs as being something that really would be enacted, to now we're back to potentially, tariffs as a negotiating tactic. It's a fast moving market as always. The news is flying fast and furious. Even last night with news that the, U.S. International Trade Court has declared a lot of these tariffs illegal, and so now the administration is going to appeal that ruling. It's really, really difficult, I think, to kind of separate the news from the signal, or the noise from the signal, in terms of everything that's happening with all these headlines. As an investor, it's one of those things where you have to kind of ride through the volatility. But as a trader, it's got to be great. You've got all sorts of opportunities. Whether it's Nvidia earnings yesterday, kind of reversing a little bit of slump in the shares and potentially giving a boost to technology in the short run, to just all sorts of macro news constantly moving the market. So at least for our thesis, we came into the year thinking that, we'd have a lot of benefits from tax cuts, deregulation. I think that's common across most people, relatively optimistic on the year. Clearly, there's been a lot more volatility than we expected. We did expect tariffs to be an issue. We just didn't expect them to be this large an issue. And I think that's really what everyone's grappling with. How much of what we're seeing this year is going to be a short-term move, whether that's the dollar weakening, whether that's yields going higher, and how much of this is structural changes, that are due to not only Trump's approach, but potentially America's new approach for the coming years. I think the jury's still out on whether or not this is, some of those things are long-term moves. But in the short run, it does seem like a lot of what's happening is here to stay. Even if the tariffs come in at a lower level, let's say a baseline of 10% across the board for most countries, and then higher for some countries like China at 30%, that's still materially different from where we started the year. And clearly, the average weighted trade tariff is going to be so much higher this year than anything we've seen in the past 80 to 100 years. So a lot to think about, and a lot of moving pieces for sure.
Chris, that's what I wanted to ask you, because I believe the same thing, that tariffs are going to be here to stay at least for the next 3.5 years. What does that mean? Like, is there going to be a digestion period in the second half here? Because if tariffs come in, Trump saying Walmart, eat those tariffs, Amazon, eat those tariffs. I mean, is that really possible? Can the companies eat the tariffs and just not pass it through? Or does it get passed through and then inflation starts to come back in? What are the long-term repercussions here for tariffs?
Yeah, that's a great point. And even in your intro, you talk about the market climbing a wall of worry, and it is. And that's my concern as well, because you think about all of these tariff pauses, July 9th as being one example, maybe the EU a little bit later. And so at the end of the day, you have to believe there's going to be some level of tariffs, as you said. And there's, retailers don't run with a 10 to 30% profit margin. So they clearly can't eat the tariffs. That's impossible. And so I think like what we saw in 2022, with inflation, and so inflation just in general through supply chains, through, a big boost in the money supply, the way that these changes move through the markets, through the economy is really complicated, right? And so the answer is almost always all of the above. So let's say there's a 30% tariff on goods coming from China, and that has to do, that makes up a certain portion of Target's or Walmart's inventories. To some extent, they are going to pass along as much of those costs as they can. They're going to look for cost savings throughout the rest of the organization. So that could be layoffs, that could just be efficiencies in terms of how they run things. It could be, playing one supplier against another. So to some extent, of course, the company is going to try to be efficient where possible. They're going to try to pass on those costs to customer where possible. And then when all else fails, they will have to eat it in terms of margins. So I think it's going to be all of the above. So what I'm concerned about is, if we have a price earnings ratio for the market of, 22.4 times next year's earnings, that's relatively rich. I mean, I think if you look at a 30-year history and it's closer to 15 or 17 times, we've been operating above that, a multiple for a while. So I wouldn't suggest that the multiple is going to go back down to historical averages, but it does feel like multiples right now are pretty high, almost priced for perfection. Meanwhile, we had a really good Q1 in terms of earnings. And so again, the denominator is, I still think, relatively rosy. Everything we're just talking about right now talks about potentially earnings are going to have to go lower. Either higher costs are going to cause consumers to spend a little bit less or be a little bit more picky about what they do. Companies are going to have to, compress margins to some extent. And so really that's the overhang in the market. Is this in and of itself something that will puncture the market? Doubtful. The market will continue to climb that wall of worry. But when valuations are elevated, earnings are at risk, you're just back in that situation where it's vulnerable to unexpected shots. And that's where I think we're going to see in the second half, we are going to see the market just more vulnerable to pullbacks, whatever those, whether it's a black swan or whether it's something that we do expect to happen, like tariffs, the known knowns or the unknown unknowns. But it makes me a little bit nervous as a long-term investor, at least, for 2025, 2026. Can the market sustain these multiples, and can earnings continue to rise at the pace they've been rising?
All right. So whether they're tariffs or no tariffs, right? You gotta pick sectors, and you gotta figure out, tariff proof, non-tariff proof, whatever. Talk about the three sectors right now where you're mainly focused on the bullish side.
Yeah, so whenever you're looking at sectors, clearly you're looking at not only valuation, but you're also looking at potential headwinds and some of the uncertainty. And so some of the sectors we like are more along the cyclical lines. So we are having, a little bit of optimism about the economy, about things continuing at the path they're going. Clearly all bets are off if we head into a recession, which for now looks like it's not as likely in the second half as we thought even earlier in the beginning of April. So some of the sectors we're looking at are industrials, financials, and actually energy for different reasons. So looking at industrials, that's something where, tariffs could be really a dual-edged sword. On the one hand, for a lot of the industrial companies, some of the tariffs could prevent barriers for international competition. So to some extent, we could see the position of US-based industrials companies having a little bit more room to operate within the United States. On the other hand, obviously, if their supply chains are impacted by tariffs, that's going to be a negative. So that's the dual-edged swords, double-edged sword of tariffs. However, we've seen time and time again that a lot of companies have been able to get exemptions. So we're cautiously optimistic that within the industrial sector, some of these larger companies are going to be able to manage the supply chain, potentially get some exemptions, and really continue to benefit from an expanding economy. On the financial side of things, it's a little bit of the opposite. There's really not a lot of direct impact of tariffs on financials companies, at least for now. We haven't seen a lot of proposals or any proposals really putting tariffs on services. For now, it's all been on goods. So from a financials point of view, not a lot of impact on tariffs. But obviously, with financials being so tied to the economy and being able to finance companies across all industries, it's a little bit of a moving picture. We have seen capital markets activity in terms of IPOs, M&A, things on the investment banking side of things be muted or really shelved because of all this tariff uncertainty. We do think some of the uncertainty will lift as we go through the year. Again, whether the tariffs are higher than expected or lower than expected, that will cause different ramifications for companies to adapt and adjust. But that should open the market again for IPOs. And clearly, there's a lot of pent-up demand. You just look at a lot of the the futures rising this morning as we take a look at kind of the aftermath of the Nvidia better than expected numbers yesterday. So we do think for financials, that's one place which could benefit regardless of what happens with tariffs. Again, as long as we stay out of a recession. And then that last sector, energy, it's an interesting sector because it's really been one of the laggards this year. There's been a lot of moves within oil prices, and of course, as oil prices go lower, that makes the sector challenged. But we do think there's structurally going to be an increasing demand for energy, whether you're talking about artificial intelligence, whether you're talking about modernization from the rest of the world. We're continuing to see more and more energy needs, and so we think there's a structural demand coming that will be rising on the energy side of things. And so we think this could be a good opportunity to buy one of those, buy some really good quality companies on sale as everyone's working through the tariff uncertainty and potentially lower oil prices in the short run. And then one last point to make there, if other countries are looking to reduce the trade deficit with the United States, one of the easiest things they can do is buy U.S. oil or even U.S. natural gas. I know for many years, liquid natural gas, LNG from the U.S. has been a big topic. And so that's something that a lot of European countries could instantly take delivery of. And so we may see a little bit more demand on the U.S. energy side versus the rest of the world if and when the time comes when they need to reduce some of their trade deficits with the United States in order to appease the administration.
What are you avoiding in this environment?
Yeah, so things that we're avoiding are more on the interest rate sensitive side of things. As we talked about a little bit earlier, we do think we're in this period of interest rates moving higher. And so in the beginning, interest rates were moving higher potentially from uncertainty. Then you had concerns around the budget deficit. A lot of the structural things that are moving interest rates higher, just from a U.S. point of view, I think will continue. I don't know how we solve the budget deficit. I don't know how we can bring the debt to GDP ratio back under control. I think more and more bond investors are going to be expecting higher yields. And that's even before you talk about potentially, international investors diversifying a little bit away from the United States. The U.S. has obviously benefited from investors around the world investing in our stock market. And we've seen that U.S. exceptionalism, but it's also been happening in the bond market as well. All things being equal, you could argue U.S. bond yields have been lower for longer, partially because there's been so much demand, price higher, yields lower, to the extent that some of that unwinds, I wouldn't suggest for a second that the rest of the world is all of a sudden not going to want U.S. Treasuries. But all things being equal at the margins, I think there's a little bit less international demand for Treasuries, and they're going to require higher yields, which really go hand in hand with that. And so if interest rates potentially are going to continue to go higher or not come down as low as they've been in the past, sectors such as real estate, such as utilities, which are more interest rate sensitive, are ones we'd avoid. So those are some of the things that we're looking at least as we speak.
Okay. That's it. Chris Zaccarelli, CIO, Northlight Asset Management, joining us here on PreMarket Prep for a big picture outlook, which we need every once in a while. Thanks again, and looking forward to having you on again soon.
Thanks so much. It's been great.
Okay, let me throw some charts up here, and let's get to some ratings.
Yeah, there's a few today. We've been trying to do a little bit more structure to the show because we kind of go all over the place. So we've been trying to do ratings after the guest here. So we'll just go into like quick upgrades, and I can just mention them, and there's, a few here. Deutsche Bank, probably, this is a big one. We obviously have a lot on Nvidia, but Deutsche Bank upgrading LUV to buy. That's probably a standout one here because this is a stock that's obviously been in the gutter. It's went from best of breed to worst of breed over the last 10 years. And now it's starting to come back up. I mean, Joel, I want to get your technical thoughts here. Deutsche Bank, like said, if I just go into the note here for a second, they are raising their price target up to $40 from $28. They are upgrading LUV from hold to buy. They're giving 3 key reasons. Southwest refreshed board of directors. 2, current strategic initiatives should drive meaningful revenue and EBIT growth over the next 12 to 24 months. And they also think Southwest's return on investment capital will significantly improve over the next 2 years. So that's the reason for the upgrade. $40 price target. Does their case hold water, Mr. Elconin?
I mean, it just got a bit. It's got the momentum. So the baggage thing came up, and the street like that, you got a bull market, you got momentum in it. So until it turns, you got to go with the trend. I'd see a spike up to over 34. I don't know if that was some crazy overnight prints, but you can look at a nice whole number like that. There's a daily high coinciding with that at 33.89. So 33.89. 34 potential target, probably right around its 9-day average trading range. How's the consumer doing? They're doing okay. Are people traveling? Well, they're still traveling overseas, but traveling in the U.S. too, and not having that exposure. So airlines and leisure have been coming back. Overall, the Jets has had a little bit of a rally, kind of stalling at 23. DAL perked up after its earnings. There's probably a little catalyst for that. So, yeah, the trend right now, the recent trend is your friend.
Starbucks downgraded to hold a TD Cowen. This is a stock that can't seem to find its way either. Been kind of hanging out. Retested the April lows back in May. That test did hold, but now you're running this wall of resistance at $88. They downgraded. It's down $1 here this morning. You buying the dip in Starbucks?
No, I might go buy a coffee at Starbucks, but you are through yesterday's low, so you have to look at that. No, not quite yet. No, I stand corrected. 84.54, yesterday's low, trading down in the pre-market, a decent amount of volume. So if I'll say if that low doesn't hold, you got to look out on the downside here. I think the next area of support would be at the 82.60 level. But all things considered here, holding the previous day's low, see what happens if it trades there. Coming back on the upside, the mark. I'm sure a lot of people would like to see the $86. And someone asked about this one in the STN room the other day, and there's just this wall just under 88. So I don't think you get real excited about this stock. And I think there's a quad of highs at 88 in Starbucks.
I want to go to a few earnings that report tonight, just previews here. Let's start with Dell, DELL. That sold off last night on Hewlett Packard. We didn't cover the HPQ earnings, but they were not good. The stock got hammered at one point in time, was down $4. Has paired those losses, is up or is down up 2 points from the lows. But again, you could kind of see it last night. You could see buyers coming in. We were trading a little bit in the S10 room last night talking about it, and you could see buyers emerging in the 23 area. So it has popped back. That hit Dell originally, but then the overall news and Nvidia, and obviously that trumps, the HPQ, even though Dell obviously makes PCs as well. That trumps, and Dell is now trading higher here. This has been a hell of a run. I am still long Dell. It was part of my acronym in my fade trade. It's come all the way back to where it was. Obviously, I had bought more at 71, which helped my dollar cost averaging huge. Still got a core position in this. I look at lots of overhead resistance on Dell at 120. I want to get your thoughts going into this report because I was tempted to maybe lighten up into the report because it's come so far. But then I see Nvidia's response and thinking, well, it's AI, valuation's reasonable, and maybe I should just hold it through the report. What do I do, Joel? What do I do?
Well, I mean, it's at an area of resistance after a nice rally, consolidating. So if you're sticking with the trend, it's consolidation to move higher, right? Since that April low. I mean, people are wiggling out here at 115.5, 116. So if there's a spot, if you're worried about a bad report or more or less a bad reaction, yeah, you can take things off at this area. Maybe not the whole position. I say if you do get a pop and they start to like it, not sure what the expected move is. But boy, oh boy, once you get above 121 to 122, you got multiple highs, 1, 2, 3, 4 highs in that area. Man, on the downside, I mean, with these, with these bad reports and the, momentum. I mean, look, I bet you this straddles around $10, or yeah, no, maybe not that much. But good support. Good support. If you go negative, so looking at the edges, 110
You'd
support.
exactly be right, Joel. It's just over $10 a straddle. You're getting good these options. Marvell is the other one. It's up 5% on the Nvidia numbers. It's been in the gutter, but it's been trying to claw its way back. This has been a disaster. I have a small position in the long-term portfolio. I put on a half-size position. I'm glad it was only a half-size because the stock has fallen dramatically from the $90 price where I'd bought it back earlier in the year. Holy. Expected move, give it to you quickly. It's about $7. That would put us up to like 75 or down to 60. So, think about your band, 60 to 75. What are your thoughts on this one going in? Low bar?
Yeah, I think so. This is the one. I like that set. Let's get over the gap area before you get really excited. 75, 77 was that gap down area back in March. And I think even if they don't love the report here, investors were kind of ganging up at 59.5, 60. I mean, just based on this chart, I mean, going in short to report, I mean, any kind of low, clearing that low bar, favoring the long side into this report.
One other one's going to report here, and this was an interesting one from Warren Buffett. Remember Alta? He was long it, and then he sold it, and then it's rallied since then. I mean, this is when he got all wrong. He was like day trading Alta almost felt like, because he bought it and he only had it for like 3 months, and then I think he sold. I don't know if he's all out or not, but ULTA has come a long ways from the lows. Back in March, we hit 309. We're up at 418. But then when you give longer term perspective, the stock was $574 beginning of 2024. So, I mean, is it high bar, low bar? I think it's kind of in the middle. I don't know if it's a high bar or a low bar. Alta Beauty, is there a place for this one in the Elconin portfolio?
Short term, I mean, I just look at this ALF report and I just say, okay, I know it's a little bit different. Alpha serves a little, but I mean, you have to favor the momentum in this one, and it's got a nice move moving to the upside here. So not nowhere near in my portfolio, but going off the ALF. Let's look. Let's see if Alta can follow through. Once again, a little bit different of a customer, but
yeah,
ALF good.
And ALF very dependent on China and tariffs, and there's been a whole Asia, tariff trade. ALF's really been hit off tariffs, so I think that helped its news last night too. Like ALF popped, and then it got the tariff. kicked down the road or delayed, on some of these from the court ruling, and that helped out too. So it's one of those tariff stocks.
Okay. All right. 8:59. We're meandering around pretty good here. Trying to hold mid-range on the session. Early on, I'll just look it up. Thursday's high. We're right back up there, 59, 52.50. Of course, we did trade over 6,000, so we've traded to it a lot. But keep an eye on the daily highs in your stocks to see if you get some follow through. Tomorrow, our guest will be Tony Pollock. Tony was on vacation last week. He couldn't join us.
Nice.
Tony will be joining us on pre-market prep, and let's get ready. Let's get ready for the open in the STN room.